What's up, everyone? Excited to give this video today about Upstart Holdings, which I believe does have massive upside in its future. And I put out a video a couple weeks ago expressing my bullish opinion when shares were around 30 bucks. Now we're significantly higher than that level, so happy to see how that played out. But let's take a look at the chart and see if we can't give a price prediction for shares. So first off, this is not financial advice, so please do your own research. But just quickly, in this video, I will be going over short interest. I'll go over some fundamental news. I'll dive into the financials, and then I'll compare those financials to the financials of the peers, and then I'll go through some analyst upgrades. So, with that being said, if you would like to skip around to the parts of the video you are interested in, you can just do that below. But let's dive right in. So, Upstart has been on a pretty good tear here over the past couple weeks and has moved from about $13 to nearly 50 bucks in the matter of a couple months. So momentum here is extremely bullish. We saw the 50-day moving average cross above the 200-day moving average on June 9th, which for those that don't know, that is called a golden cross and just signifies bullish momentum. So definitely seeing a very good bullish momentum signal. We're above this resistance level at around $25, which is where shares had topped out in February. It's also where shares had topped out in October, and it's where shares had bottomed in kind of mid 2022. So this level is definitely a significant level to break, and with that being said, I do believe this $25 level will likely act as a bottom for shares if we come down to test this level. But in terms of where I think shares are heading, so we see a major resistance level at about $55, which is where the stock had topped out in May and June of 2022. So I do believe that we will see some resistance, some sideways trading, some capitulation, whatever you want to call it, around this level. I don't think that the stock will fall off a cliff, just simply saying that we are somewhat due for a pullback. It doesn't have to be a 2-3 week long pullback, but I do think we'll have some red candles here over the coming weeks as we come up to test this major resistance level. In terms of how I will be trading this stock, I'll be waiting for two things. So if we're able to break above this $55 level, I think we likely get a move higher to roughly $90, really like 85. So this is where shares had pretty much topped out in May. It's also where shares had bottomed in March. So I think we could very well come up to test this resistance level at about 90, 85 bucks, over the coming weeks. So and you can see that right here. That's basically right there. So that's kind of what I'm thinking for shares. And then the other way I'll be playing this is if we come down to test these daily moving averages, which currently lie at about 30 bucks. If we come down to test these DMAs, I think we hold and move higher over the coming weeks. So I'm waiting for one of two things for us to get a move above this level. I'm waiting for that. Then I think we'd likely come up to this resistance level at around $85. If we don't get that move and we come down to these DMAs, I likely believe that we hold these levels and continue higher. So that is my price prediction for Upstart. And then we can take a look at some short interest numbers here. So the stock has 38% of the float sold short, which is a massive number, and it's definitely higher than you see throughout the general market. That could lead to some sort of a short squeeze, but I wouldn't say that the short squeeze is inevitable just because days to cover is at 3.0. And for those that don't know, 3.0 days to cover simply means that it takes 3 days of daily average volume to cover the shares that are sold short. So not the best number there. And typically we look for a 10 in terms of days to cover to signify a high likelihood of a short squeeze. So really do need to see a higher days to cover for me to believe that a short squeeze is very likely. But given we have a 39% float being shorted, I do believe that there is at least some semblance of likelihood that we get a short squeeze. So I would give it kind of a C plus in terms of a likelihood for a short squeeze. And then let's take a look at a couple notes here. So obviously, Upstart uses artificial intelligence for its traditional credit scoring methods, which has provided massive benefits and it is a huge differentiator for the stock. And let's take a look at this chart here. So Upstart's model is significantly more accurate than lending models, allowing to approve more applicants at lower loss rates. So this company is basically being able to do more loans at less cost because of their AI system. So compared to U.S. large banks, they have 173% more approvals at the same default rate. And then there's also 53% fewer defaults at the same approval rate. So Upstart is really just doing it better in pretty much every sense of the meaning. It's approving more loans and it's seeing less defaults than large U.S. banks, which have more stringent and strict lending standards. So really awesome to see this. Upstart's model train on over 100 billion cells of performance data with an average of 90,000 new loan repayments added each business day. 23 model upgrades delivered in Q1, including the largest single accuracy improvement measured in Upstart's history for small dollar loans. So they're constantly improving their AI, right? That's how AI works. The more data you feed AI, the better it gets. So over time, their lending system, their lending strategy gets better and better. So that's really awesome to see. And then one more point I'll make. You can see here the performance here has gotten better over the past couple of years, which we like to see. And then the growth thesis for Upstart centers around its ability to take market share in the personal and auto lending, as well as new markets such as Helcos, and that's just real estate. On the conference call, management noted that 90% of Helcos real estate are financed by banks and credit unions, making it likely that banking partners would be willing to work with the company. So, given that Upstart has this amazing system for lending out capital, well, it's very likely that they're going to be continuing to garner partnerships with larger banks who have a kind of have the larger book of business. All they really need is the system of Upstart to kind of optimize their book of business. So don't be shocked if you see a continuation of deals with large banks and credit unions over the coming years for the stock. With that being said, let's take a peek at some of the financials for the company. So right now the company doesn't make any money, so it's tough to kind of give them a grade for valuation, obviously, right? But when we look at price to sales, we're trading at a price to sales of 5.8, which is below the sector median, above the sector median, and this is a number where the lower the better, right? So although we're nearly double the sector median, we're below our 5-year average, which is awesome to see. The 5-year average for price to sales is at 8.5, and we're currently at 5.8. So I know we've gotten this huge run over the past couple weeks, but at the end of the day, this price to sales number is cheap relative to historical valuation. Let's take a look at some growth numbers here. So year over year is -37%, which is well below the sector median, which actually saw a rise of 6% over the year. And this growth is well below Upstart's 5-year average growth of 93%. So definitely are seeing growth numbers slump, which is likely playing into the underperformance we've saw over the past couple of years, really. Or I shouldn't say years, but before 2023, the stock was underperforming a bit. So the growth numbers were likely playing into that. So growth numbers, to be frank, need to kind of turn around here. Obviously, we talked about all the growth drivers for the stock, so I do believe these numbers will be able to turn around. And then let's take a look at profitability. So Gross profit margin is very healthy at 72%, which is well above the sector median of 58%, but is below our 5-year average of 83%. For those that don't know, gross profit basically is just revenue minus cost of goods sold. It tells you what you make on everything that you sell. So, 72% is a pretty good number there. And then we have $4.68 in cash, which is a pretty solid number. That basically tells you that the stock's market cap, 10% of it is in cash, which is definitely a good sign and shows that the stock has a good floor and a good cash base to help fund its future growth endeavors. So these gross profit numbers, the profitability numbers in general look pretty solid. And then when we take a look at the companies compared to each other, the peers compared to Upstart, we can see that, well, over the past 12 months, the stock has greatly outperformed. So the stock is outperforming SoFi, PayPal, Ally Financial, and Affirm. So we're seeing that pretty massive outperformance, and this is definitely good to see for the stock. And for those that don't know, when you have a stock that is outperforming its peers, that trend tends to continue. So always good to see that trading outperformance. Hopefully we see a continuation of that. And then let's take a peek at some of the valuation numbers compared to peers. So Upstart is expected to have a 71 times PE next year. And then Affirm is actually projected to be negative, and SoFi is also projected to be negative, and Ally Financial is at 5, and then PayPal at 12. But Affirm and SoFi are both, pretty far from profitability. SoFi projected to be profitable in 3 years. And then let's take a look at the growth numbers. So Affirm, SoFi, Ally Financial, PayPal, they all have better growth numbers than Upstart. Upstart actually ranks out as the worst growth numbers amongst the peers, but we do like to see that its 3-year compounded annual growth rate, so growth in year 3, is projected to be 64%, which is definitely outperforming generally the peers besides Affirm. So over the next 2 years, growth is projected to be pretty poor, but 3 years out and 5 years out, growth numbers do look very solid for this company that has a bunch of growth drivers, as I explained earlier in the video. And then gross profit margin is at 72%, which is a good number. It comes in above Affirm and basically in line with SoFi and above PayPal. And then net income margin is minus 41%, which is a pretty bad number. But when you compare it to peers like Affirm at minus 64% and SoFi at minus 14%, it's not too shabby. And then we can take a look at short interest compared to peers. So short interest is highest amongst Upstart, and it's not really close. Upstart has almost double the amount of shorts than all the other peers. So definitely seeing shorts be very interested in the stock. But, depending on how you look at that, you could say, all right, Upstart has a higher likelihood than the peers to have a short squeeze, which, you could consider a positive. And then total cash is $400 million, and then total debt is $1 billion. So net, they have $712 million more debt than cash. This is never a situation where you want to be in, because it basically puts you under the gun and may force the stock to, issue new shares or issue new debt, which is never something you want to see for a stock. So not the best balance sheet, to be frank. But when we compare it to Affirm and SoFi, it's not that bad. So SoFi has $3.7 billion more debt than cash. Same number here for Affirm. And then Ally Financial has $12 billion more debt than cash. And then PayPal has $900 million more debt than cash. So in terms of net debt, cash relative to debt, the company does rank out as the best in terms of peer rankings here. So not a horrible number there. And then book value per share is at $7.60, which is a really good number and ranks out pretty solid amongst peers. Although Affirm has a pretty good number at $8.50 for book value per share, and then Ally Financial has $36 book value per share. So, yeah, it all up, I think Upstart is a pretty solid company, and its AI lending system is clearly superior than the large banks system. So that gives the company a leg up, and I believe should lead to the stock outperforming over the coming months to years. And like I said, I'm waiting till we get a move back down to the DMAs or a move above this resistance level at about $55. So all in all, quite bullish on the stock. I do think the AI lean towards the stock is not fluff and really is a huge differentiator for Upstart. So with that being said, I'm bullish Upstart, and I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.